Hello and welcome to CMC Markets and this quick look at the week ahead beginning the 22nd of May. And we're coming off the back of a significant increase in volatility, the biggest one-day fall in US markets since September last year, over concerns broadly that President Trump's reform program may well not get implemented. Certainly the rise in US markets and the rise in the dollar that we've seen over the past few months has been predicated on a successful implementation of a tax reform program, a bank reform program, an infrastructure program. And ultimately, these allegations that President Trump has tried to influence an FBI investigation into one of his previous national security advisors, Michael Flynn, is certainly casting an enormous shadow over the Trump presidency and ergo a significant amount of concern that any of his reform programs will actually take place. So what does this mean for the dollar? Well, ultimately, the dollar has returned to levels seen before Mr. Trump got the presidency. However, US markets haven't. They're still around about between 10 and 15% above those levels. So I think the big concern here is what we've seen in the past few hours, past few days, is whether or not this is an indication that we could well see further declines in US markets. Now, only time will tell, but certainly I think this coming week's events, will obviously also give clues as to what the Federal Reserve might do when it meets in June, because we have the latest minutes from the FOMC meeting. There's been an awful lot of talk about whether or not it will scale down its balance sheet. There's also been an awful lot of debate as to whether or not it's going to hike rates in June. Now, 2 weeks ago, it was 100% probability. The markets were pricing 100% probability that we get a move in June. Given the events of the last few days, I think there has to be a significant amount of doubt as to whether that may happen. Certainly, Fed funds futures are now pricing in an 82% 5% probability that we will get a hike in June. So the odds still favour a hike in June. The big question, I think, now amongst market participants is whether or not that will be one and done, whether we'll actually get to see a rate hike at all. Will this political noise in Washington give the Fed cover to actually pull back from a rate rise in June? And I think that's really the key question, and that's certainly what's been borne out in the way the dollar has been trading over the past few days. We've seen a massive decline in dollar yen, and that really, I think, is the best arbiter in terms of what US yields are doing. We've seen a significant decline in the 10-year yields from around about 2.35, 2.38% to around about 2.2%. And that would suggest that markets don't believe that the Fed is going to be anywhere near as aggressive as they thought they would be at the beginning of April, and certainly even at the beginning of May. So the next target for the dollar yen is the 200-day moving average, which currently comes in just below 110, keeping a very, very close eye on that. But also we've seen the pound break higher against the dollar. And I think that's important in the context of the GDP revisions that we've got coming out later this week. We've got first quarter GDP, second revision for the US and the UK. Now, cast your mind back a few weeks, and UK GDP came in at 0.3%. That was significantly below expectations. Since then, we've seen some improvement in the economic data out of the UK. UK retail sales for March were actually revised up from minus 1.8 to minus 1.4. And some of the data at the back end of the quarter was probably more positive. So I think there was an expectation we were going to get an improvement in that GDP number. And I think the retail sales numbers that we saw for March, the revision in March, probably helps reinforce that narrative. We've also got second iteration of US Q1 GDP. Now, you may recall that came in much lower than expected at 0.7%. So I think there is a perception that maybe that we might see an upward revision to that. I'm not convinced myself, because a lot of the data, a lot of the hard data, particularly retail sales, hasn't shown really any signs of a significant pickup. So I think there's an awful lot of concern about that. So I think in the context of what we're looking for this week, it's going to be the UK and US Q1 GDP revisions and the overall tone of the April Fed minutes. Now, they're not going to tell us too much with respect to what the Fed is going to do in June. I think there's a widespread expectation when they met in April that they were going to act in June. I think the debate is going to be surrounding what they do with their balance sheet. There's been an awful lot of debate surrounding that. Obviously, those minutes are now a little bit stale given recent events, but ultimately I think they'll give us a good indication as to the Fed's thinking, not about their interest rate policy, but about how they deal with the balance sheet problem. So that's it for this week. Thanks again for listening. This is Michael Hewson talking to you from CMC Markets.